Hi, I am Anna. I come from www.ntvforex.com. How will ECB react to new developments? Analysis. http ntvforex.com News IDE 94B3B94 2021 0441 p.m. Next week, the Governing Council of the ECB will meet and discuss monetary policy. Changes in course are unlikely. The new forecasts of the ECB economists should not provide any basis for this. We expect only minor, if any, changes in the forecasts for future GDP growth and inflation. Thus, the outlook of the members of the Governing Council, which is the key factor, should not change significantly. However, there are risk factors. Since the last meeting of the ECB's Governing Council in July, new COVID-19 infections in the Eurozone have increased significantly. The question is how the resulting risk for the economy is assessed. In our view, there are two reasons why measures should not be taken as a result. First, because the economic data has nevertheless continued to develop well and the recovery is continuing. Second, lockdowns of entire countries remain unlikely, not least because mortality is low compared to the spring. Another factor that has changed since the last meeting of the Governing Council is the significant strengthening of the euro. The euro has strengthened not only against the dollar, but also against the currencies of a number of trading partners. The speed of the euro's strengthening will no doubt have been noticed by the ECB, and no central bank wants a stronger currency during a period of weak economic activity. At the same time, however, the realization should prevail that there is little that can be done about it. For it is probably less a question of the strength of the euro than of the weakness of other currencies. In addition, although the euro is at a multi-year high, measured by a nominal index of the currencies of trading partners, the development of the real exchange rate is crucial for competitiveness and is in the middle range. What will happen after September? At present, we do not expect monetary policy to be eased again. If, however, the outlook for the economy should deteriorate because, for example, a possible increase in the COVID-19 infection rate causes more damage than expected, this could still happen. In this case, the ECB would react by increasing and extending the PEP purchase program. Even then, we would regard a reduction in interest rates as still unlikely. Stronger GDP decline expected in 2020. We lower our GDP forecast for the Eurozone for 2020 to 7.6%, previously 7.1%. The main reason for this is the stronger than expected economic slump in France and Spain in the second quarter. In addition, the current rapid increase in new daily COVID-19 infections in France and Spain poses a risk for the recovery in the second half of the year. Although a second general lockdown of entire countries is not expected, local restrictions will still weigh on the service sector in particular. In contrast, Germany's economy is currently recovering more quickly than expected. For example, Germany's foreign trade is benefiting from the unexpectedly dynamic recovery in global trade in goods. In addition, Germany is currently managing to stabilize the infection rate at a low level. Against this background, we expect the economic recovery to continue throughout the Eurozone in the second half of the year. From a regional perspective, however, outbreaks of COVID-19 temporarily dampen the recovery. At slight adjustment of our GDP forecasts during the summer months, the Austrian economy exhibited strong signs of recovery, with high-frequency indicators, such as truck and electricity usage data, coming close to the level of the previous year. Private consumption and domestic tourism showed good improvement, while the foreign tourism and entertainment sector remained among the most severely hit. However, the data for 2Q revealed that the Austrian economy has suffered more damage during the lockdown period than previously expected. Compared to 2Q19, real GDP went down by as much as 12.5%. Moreover, the recent increase in new infections per day in Austria and in many other countries in Europe increases the risk of new restrictions, which would adversely affect tourism and trade. In view of this, we have slightly adjusted our GDP forecast for 2020 downwards from 6.0% to 6.2%. For 2021, we expect a slightly stronger recovery of 4.3%, previously 4.2%. Download the full week ahead. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.